The pandemic was an enormous buying opportunity for nimble investors. How did you respond? What did you buy?
First, we responded in a combination of horror and glee, because these big market dislocations often lead to a period of significant value outperformance. So we knew our day had arrived. The question was what to do about it. And all of our stocks fell very dramatically by March 23rd, when global markets reached a bottom. But what we did starting in February of last year was look to trade up. This is a similar strategy we employed in the global financial crisis. Let's take our battered value stocks and see if we can find equally undervalued complements, similar companies, but perhaps even better management or better global positioning, and buy those. And then this crisis, one of my colleagues termed it the global financial crisis, but for transport, for airlines, aerospace, anything to do with aviation, anything to do with lodging, hospitality, et cetera, tourism, destroyed. So we bought we think the world's best aerospace company in Airbus. And we haven't been able to buy that stock in at least a decade. It was too expensive. But investors absolutely abandoned it. And other aerospace giants of that nature, not to mention great software companies in the airline and hotel booking area. Software has been a little hard to get access to as a value manager because they often trade, especially these software as a service companies, at multiples of sales and sometimes with very little in the way of earnings. But if software company in travel and tourism, no one wanted them. So we now have our global clients own Booking Holdings, which is a fantastic business. They have Sabre in the U.S., and then our international clients own Amadeus. So again, we just looked longingly at those stocks for years, and this crisis, this pandemic, as horrible as it was, brought some amazing companies to us as value managers, and those stocks will continue. Or Walt Disney is another example in the U.S. market. We believe they'll continue to pay off for years and years ahead, consistent with how value tends to respond coming out of a crisis. In this case, it's not just undervaluation, but these companies have the extra accelerant of the fact that they're post-pandemic beneficiaries.
And Sarah, what are you positioning into now? Because there has been an incredible reflation since March 23rd.
I'll give you one example. We nursed and coddled in client portfolios a fantastic company, Volkswagen, but it went through a crisis in late 2015 with Dieselgate. We doubled positions, and our head of industrials worked very hard with the company management, because that's what we do as value managers. That's modern value management, is working alongside the managements of the companies to hold them accountable. And VW not just is cyclical. Imagine what happened during the pandemic. Auto sales grinding to a halt, and the companies couldn't get their labor engaged. But the stock, emblematic of what's happened with cyclical stocks in these months since November of last year, has rallied incredibly hard. It didn't really start until well after the first quarter. Well, let's say after February. In January, the stock was 140 euros a share, and now it got up as high as 235. And the reason I'm giving you the details on Volkswagen is you need to understand that's a 5-year annualized return of 15%, which for a European stock is fantastic, especially in a fairly distributed business like automotive. But we took profit and we reinvested those proceeds into more defensive areas. When a cyclical stock delivers the good part of its next 2-year return in a handful of months, or 2 in this case, disciplined value managers like Causeway have to reduce the position. We have to. We have no choice, because we work on a risk-adjusted return basis. So the stock on a risk-adjusted, its return is shrinking and the risk is still there, so the stock is no longer as competitive. And then we can reinvest those sell proceeds into stocks that are more competitive. And this has all happened so quickly. I'm sure clients are really quite astounded. But you can't hold a cyclical stock indefinitely, because the stock's price discounts the recovery. And then the next phase is often not nearly as attractive or as enjoyable. And typically an investor should be out by then. These are not stocks to hold indefinitely.